When we discuss SoFi, there are several expectations to consider for the upcoming week. These expectations include potential volatility factors and my perspective on where things might be headed. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting with Monday, Tuesday, and Wednesday, the market will be heavily influenced by technical indicators and statements from a few Federal Reserve speakers. The content of these statements will likely impact expectations regarding interest rate cuts, similar to what we saw last week. The market is keenly focused on interest rate cuts at the moment. Thursday will bring the GDP data, and Friday will feature the Personal Consumption Expenditures (PCE) report, both of which are closely tied to expectations of rate cuts. For the September 18th meeting, the current probability of a 25 basis point cut is 58.7%, slightly down from 60.5% on Friday. There is also a 6.3% chance of a 50 basis point cut. These probabilities are critical because the market is predominantly concerned with potential rate cuts right now. The Fear and Greed Index is currently at 41, indicating a low appetite for risk among investors. This suggests that broader market negativity could lead to widespread stock declines, and SoFi, which has no scheduled news events, fireside chats, or other significant updates this week, will likely be influenced by the broader market trends. Shorts are expected to be very active this week, reacting to various data points, which could either increase short interest to the 18 to 19% range or decrease it back to around 16%. Presently, the short interest stands at 17.59%, with 182.65 million shares being shorted and a utilization rate of 72.95%. Earlier today, I released a video discussing the top 5 most heavily shorted meme stocks, using a particular website for reference. To my surprise, SoFi appeared at number 10 on this list, with a meme score of 88, a Wall Street bet score of 92, and a failed to deliver score of 84. This raises the question: why is SoFi considered a meme stock? Despite its struggling stock price, it doesn't fit the typical profile of a meme stock like GameStop or AMC. Interestingly, when comparing SoFi to other major banks like Bank of America, Citibank, and JP Morgan, SoFi stock is down 11% over the last month. While Bank of America is flat, Citibank is down 7%, and JP Morgan is down 1.5%. This suggests that the market may not view SoFi solely as a traditional bank, contrary to some opinions. In the past 2 weeks, despite bullish ratings for other fintech companies leading to significant stock price increases, SoFi has not seen similar positive movements. The most recent analyst rating from 9 days ago set a price target of $12, but it had little impact on the stock price, which remained stagnant or declined. This discrepancy raises questions about when and if SoFi will experience upward momentum. According to Elliott Wave Technical Analysis, SoFi has a pivot point at $6.73. If it remains below this point, it might drop to the $5.50–$5.60 range. However, significant buying activity is expected this week due to institutional and ETF portfolio rebalancing at the end of Q2. This could provide SoFi with substantial support. Options activity is a crucial factor to watch for SoFi. Market makers and shorts heavily influence options, leading to significant manipulation. For the upcoming Friday, June 28th, there is notable open interest at the $6.50, $7, and $7.50 strike prices. The first trading day of the week typically sees a 40% increase in the closest strike price's open interest, so we can anticipate increased activity. Currently, SoFi is trading between its S3 and S2 support levels, with $6.07 as the next strong support and $6.45 as the next resistance point. If buying from institutions continues as expected, SoFi could test and possibly exceed these resistance levels, depending on the broader market data and Federal Reserve announcements. However, shorts will remain very active, aiming to capitalize on any data points that could drive the stock down. In conclusion, the upcoming week for SoFi is poised to be influenced by technicals, Federal Reserve comments, and key economic data. Market sentiment remains cautious, with significant short interest and a peculiar classification as a meme stock adding to the intrigue. Institutional buying and options activity will be critical to watch as they could provide support or create resistance, shaping SoFi's price movement. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.